Hello traders and welcome to another video review. Today is Wednesday, November 22nd, 2023. Let's take a look at the Forex economic calendar for today. It looks like we are going to be busy today because at 10 o'clock we got the Bank of England financial stability report, and then we got a very important event, autumn forecast statement at 11 o'clock. Then during the New York session, we have plenty of important data scheduled for release. Core durable good orders are scheduled for release at 2:30, together with durable good orders and initial jobless claims. Then from the Canada, there are manufacturing sales and wholesale sales as well. At 4 o'clock, we got the Michigan 1-year inflation expectations, 5-year inflation expectations, consumer expectations, consumer sentiment data, together with the crude oil inventories and Cushing crude oil inventories scheduled for release 30 minutes later. Then there's a section of the comments from German BUBA President Nagel. Joachim Nagel will give a speech 5 o'clock. 30 minutes later, Atlanta Fed GDP now data are scheduled for release. Then we have the CBI industrial trends orders from UK, and quarter to 6 o'clock, Bank of Canada Governor McCallum will give a speech as well. And then at the end of the day at 7 p.m. we got the US Barker Hughes oil rig count and the total rig count. This is important data for all of you crude oil traders. So very busy day, especially during the New York session. Plenty of important and very important data release. I guess that the crude oil inventories at 4:30 will be the main event of today, together with the initial jobless claims and of course the core durable goods orders. So all of this data will affect the USD, American dollar. So let's find out what is going on this with this currency. We start with euro dollar as usual. Let's just switch to the euro dollar. We are going to talk about the crypto in a minute because very important data are hit the news wires as well from the crypto world. So what do we have here? Ending diagonal. Nice, very nice pattern, worked perfectly. We got the bearish harami, a little bit over 61% of the Fibonacci retracement of the last wave down. The market moved. The local high was 1.0966, 61% is 1.0963, 3 pips only. Nevertheless, no candle close above this level, so we got the confirmation and then extension to the downside. We are testing the first technical support, 1.0896. there is still one level here which might be tested soon, 1.0887. In case of a breakout, we go way lower. We go way lower towards the 1.0825. So if this level is not enough, then we have a strong set of the horizontal technical support located at between 1.0771, 57 and 46. As you can see, the momentum is finally going down. There is a bearish divergence. This is what the price is doing. Higher high. This is what the momentum is doing. Lower high, which is why we're going down. Current momentum is on the level of 55 points, 5 points away from the level of 50, which is the neutral level. Any breakdown below this technical support would actually means that the momentum will test the level of 50 or even break lower, break to the downside, which eventually might result in another spike to the downside. So the short-term outlook for the euro remains bearish. What is going on with the US dollar index? Plenty of data from the USA, so let's take a look at the US dollar index because this is the currency they pay in the USA. So what do we have here? Of course, we would like to check how much did we retrace from this high. Yeah, so we got the wave up to here on the time frame. Let's just take our tool Fibonacci retracement from the low to the to the high. Obviously it should be the other way around, so from the high to the low, and it looks like we retraced 50% already, because 50% is at 103.47, and there is a nice pin bar here on the daily time frame chart. Let me just make it bigger. There you go. This is the pin bar that we are talking about. So we got definitely a corrective movement to the downside, because this looks very impulsive, very nice impulsive wave. Plenty of green candles. There is a plenty of the red candles, only small bounces and then movement to the downside. 50% has been tested. Now the next target is 61%, roughly around 102.53. so this is the black level of the 61% of the Fibonacci retracement. And of course we need to take a look at the momentum on the daily time frame chart. It almost hit the level of 70. Okay, so there is still a slight room to the downside. There is still a possibility that if the intraday technical resistance, which is located at the level of 103.96, is not violated. Let me just place some arrow here. Let me just find the arrow. There you go, mark down. And this is the level I'm talking about. Is that level is not violated, then the market might continue lower, basically towards the 61% of the Fibonacci retracement. So this is the outlook for the US dollar index. Then of course the market will have a chance to bounce from the extremely oversold conditions and then rally higher. So we can expect the rebound from this level and the continuation of this big wave to the upside, right? Because there are some inventories of the crude oil. Let's take a look at the crude oil. So daily time frame chart, let's just zoom in. We got our nice technical resistance here at 77.48, 78.14, 78.72 and 79.73. This is the supply zone, and we just hit the supply zone. Very nice bullish engulfing pattern from the lows of 72.16. So we already made, let me just take my price range tool. We already made like 10%, almost 8.23% already has been made from the lows as the market hits the extremely oversold conditions on the daily time frame chart. Nevertheless, the momentum is still negative. The momentum is still weak. We are right now at the level of 44 points only. All right, and we just entered the supply zone, so we might see another reversal to the downside. Let's just move to the lower time frame, 4 hour. What do we see here? What do we see here is bearish as well. Okay, so we retraced a lot. We've been moving up and up and up. Nevertheless, we hit this technical resistance 78.19, and then we pulled back. Now we are trying to break to the upside, and then there is 200 periods moving average on a 4 hour chart. So it looks like if there is a problem with this zone, we just need to wait for the reversal candlestick pattern, and the downside movement should be continued. We are right now trading above the level of 50. The momentum is positive, it's quite strong on a 4 hour chart, but on a daily is still very negative. So that might be just some sort of the temporary bounce, right? And then we should see another movement to the downside. And last but not least, the Bitcoin, the almighty Bitcoin, didn't actually break up above the $38,000 swing high and technical resistance. The local high was 37,785, and then we got another slide to the downside due to the news from the market, the crypto market, as the biggest cryptocurrency exchange in the world had been that CEO had been found guilty of fraudulent activities. mainly, so by the American SEC, of course. The Bitcoin reacted with a spike down, but it's not that big spike, really, to be honest with you guys. Normally on any kind of a data of this attitude, the range of the drop was way bigger. This time it's not like this. The market bounced already like 50% from of this recent spike down. So we are still consolidating the recent gains. We are still doing the horizontal trend. We got our levels on the chart. The longer it takes to break below these levels, like 35,610 and of course 34,671, the stronger this level will get, and it will be harder for bears to break below them. So it's a good situation for the bulls whatsoever. The bearish divergence has been resolved. We went towards the extremely oversold conditions, 8.83% pullback or correction. Market is ready to continue the up move after the correction is completed, or the horizontal trend is completed. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.